Welcome to the Accounting Technology Lab, sponsored by CPA Practice Advisor, with your hosts, Randy Johnston and Brian Tankersley.
Welcome to the Accounting Technology Lab podcast. This is Randy Johnston with my co-host Brian Tankersley, and we got to hang out in New York City together. You know, you've heard the ad.
New York City?
Yeah, well, it's not New Jersey where they make paste picante, whatever.
Yeah.
But on May 21st of 2026, Black Oar did their release event for the Tax Autopilot. And Brian and I had the privilege of attending and presenting there. But more important, most of the influential people that you would know in the profession were also present, in addition to a fairly significant number of guests. Now, this was held in the Nasdaq Tower. And again, there were 130 to 150 of us there. I didn't ever see or count a final number. I just know the room was jammed. It was a first class event that was run. And what Brian and I wanted to do was give you a bit of an update because we believe that this AI-powered tax preparation market, fully automated tax prep, is coming of age. And of course, you've got Black Oar's Tax Autopilot, but you have the competitors of Filed and Magnetic and Solomon, and you have the K1 products like Additive and Abacus and so forth. And it turns out this thing is breaking wide open. But Black Oar is installed in a fair number of my client base, so we're quite familiar with the platform and how it works. So, as it turns out, the event was emceed, if you will, by Kelly Phillips Erb, better known by some of you as Tax Girl, who writes for Forbes. She did a nice job of running the event throughout the day, but the first presentation was done by E.L. Shiner, which I have worked with off and on since inception of Black Oar. Now, there's lots of interesting background on E.L., but, he basically did kind of a tone-setting opening remark talking about how, they'd kind of got their start 2023 at AICPA Engage, and that they believe that the tax profession is currently suffering from about 25 million hours of annual shortfall of labor. And they had pretty good statistics to back this up. And they thought by 2030, there could be as much as a 600 million hour shortfall. And of course, we have been talking in other accounting technology labs about the shortage of talent in the profession and people entering the profession and so forth. But another couple of claims that E.L. made that I thought were pretty interesting, that he thought by the end of 2027, we would have fully autonomous tax prep. And by the end of 2028, we would have fully autonomous entity tax prep. So, those are all big deals. And he also went on to state that tax has an ontology problem. And, Brian and I actually just looked at an AI extraction tool that did a wonderful job of ontology. We'll talk about that in another accounting technology lab. But E.L. then said, look, they went through 2+ quiet years working with a lot of design partners, many of which were my CPA firm clients. And they wanted to produce a 100% auditable AI with 99% accuracy, 98% autonomy, 98% time savings, and 80% cost savings that allowed 2 times faster review. That was what they basically said. Now, as it turns out, they quoted a firm in Austin, Maxwell Lock and Ritter, that Brian and I have both known for a long time. They're a member of CP America, a fine firm in the Austin area, that had prepped tax returns on Black Oar in anywhere from 0 time to 5 minutes. And that's a pretty big claim. And again, we know the people there, and I know that to be a valid claim. So E.L. closed up his time talking about how, if we spent less time in prep, we could move more of our labor into advisory, and that Black Oar could allow your firm to have better margins on tax returns, and you would be able to use your talent in different ways. So now that's a bit of a rant on the opening keynote, Brian. So, yeah, you were sitting in the room trying to experience it, if you will. And it was an experience for no doubt. What have I missed on EL's presentation that you might call out?
I think you pretty much got it all. I think it was a very interesting presentation that kind of just to kind of get everything oriented here. The 600 million hour number just absolutely blows my mind because if I'm doing the math right here, that's 30,000 FTEs. And, that's a lot. And so when we're thinking about these things now, I think it almost shows us the inevitability of AI tools in this prep space. And I think I was very impressed with that. I was also very impressed with how well Kelly ran the event. I think she did a very good job. She's an outstanding writer and is also an outstanding MC.
Yeah, super. Well, then the next one up, and I always say your name wrong, Teddy. I'm sorry. Teddy Nwanchku, who's the VP of Operations. And I talk to Teddy pretty frequently, and he knows I have trouble with his name. So again, sorry, Teddy. But Teddy actually had experience at RAMP, and they pulled in the Director of Applied Sciences, Ryan Stevens from RAMP also. And today, Ramp claims to have 34% market share of AP and expense processing. They're growing very quickly. And in fact, there were some pretty significant announcements the week that Brian and I record this, um, the week before in this window. But, he basically then went on to explain some background on that. Now, it turns out that Teddy has a background at Goldman Sachs and Advent International. And Ryan talked about the teams of AI people that they had. And he was a data scientist at Meta, Facebook to most of you, before joining there. And he has a PhD in economics and so forth. I mean, the boy was really fun to listen to. But basically, he was trying in the presentation to separate Ramp the company from Ramp the product, which has been AI since the beginning of it. And in the early days, he pointed out that a lot of the expense tracking products, some of which you and Brian and I helped on, like Concur, which is now owned by SAP, was an OCR product. And then they took baby AI and machine learning steps to try to improve things over the time. Well, what Ramp became obsessed with was eliminating low value work. And they started asking questions about the data and the metrics and travel and their RAMP research agent, how they really tried to provide context. And RAMP became early to Gen AI. And they acquired a company by the name of Cohere, which had 50% of their code written by AI. And in other accounting technology labs, we've talked to you about how companies like Digits have rewritten their code with AI and how much code can be done with vibe coding and so forth. You might want to check those episodes out as well. But what I think I learned that was such a head shaker for me from Ryan Stevens was his statement that ROI should not matter at first. It doesn't matter. You should be obsessed with measuring every project. And sorry, if you're obsessed with managing every project, you're going to wind up making people scared, and you have to give AI room to fail. Again, it was one of those things. I'm sorry I didn't say that as clearly. So, but the bottom line is they went in then to quote Andy Grove of Intel fame. You have to let chaos reign and then reign in the chaos. Another catchphrase that I remembered from the past but had forgotten. And you have to find then the high ROI. So if you're thinking about AI in your firm, that's a great thing. Let it go, keep it at chaos, but then rein in the chaos. But you have to control the data. That's one little twist we'll put on that. But find the high ROI. And you have to seed your company with the right people and hire the right talent. And you can easily, with AI, get 2 to 3-fold revenue. So today, Ramp, by the way, at least Ryan's claim on the day of launch was that Ramp is processing 100 million in 50,000 companies and they've turned AI into an economically transformative item, anywhere from micro SMBs up to enterprises, and that AI spenders grow at 6 times the revenue of high spenders. I thought that was another interesting stat. So, Brian, I've kind of summarized the AI rewriting the services economy session. What might you observe? Again, you were the cautious, careful observer, and I was kind of the note taker.
I think the thing that I would just kind of generally say is that I think he's spot on with respect to those points, especially about letting the chaos reign and then reigning in the chaos. I will say that I think their approach is working quite well, simply because I'm hearing more and more about ramp in the accounting profession. It really seems to be a product, that product, and then the automation surrounding it seems to be something whose time has finally come.
Yeah. And so, and Blackor was really trying to set this up to be a managing partner strategic type of event. And you can hear with the CEO presentation from EAL, with Teddy's, VP of operations presentation, they're kind of setting the framework. And fortunately, Brian and I were able to go next as the moderators of the next panel on the evolution of tax technology and how to scale at the firm. And we were lucky to have guests, Belinda Pastana who's their deputy vice chair, and Amit Ringsha from KPMG, who's a principal in their ignition unit. You've got Daryl Shared, who's the head of tax at PwC, and Lawrence Friedman, who's the principal in tax innovation at BDO. Some high-powered tax people. And so Brian basically ran the panel, addressing all sorts of different issues. Now, one thing we're not going to do in the rest of the podcast is rehash every little detail of every little session. But, in each case, I just want to give the high overview. But basically what we were doing is talking about why AI lets you scale and what your impediments were to being able to scale a tax practice and where things were headed. And so we asked questions around that area and listened to the responses of the various attendees. So, Brian, is there something that you would recall or say, this was really important? I know Linda from EY had some wonderful responses as an example.
I will say that a few things here. The first, and I think the most important, is that when we're looking at all of this, I think that in general, Belinda, and I think a lot of other people, because I kind of went off the script and asked some questions about remote work, and remote work is going to work for some people, but it's not going to work for everybody. And I thought that was a very factual thing that I think is important that we look at. The more important thing that I think I saw across the entire panel was how everybody said that getting the data quality up was the most significant impediment to their use of AI, because garbage in, garbage out. And the problem is getting the data consistent in depth and content, and getting the data laid out where it can be used to train all these different events. And it was really amazing to me how, when you were asking some follow-up questions toward the end, how everybody 201 talked about this problem of having the data consistent and having the data in a usable format for for training and for the other purposes that you would need to use AI.
Yeah, and that makes to me perfect sense in terms of just overview, Brian, because again, we're not trying to rehash every little point here for our listeners here today. But let's go to the next section, which was AI in enterprise accounting, what's real now. And again, a panel that Kelly was kind of the MC for, but David Fergiri, the chief AI officer at EisnerAmper, Ivan Makarov, who's a partner at Anderson Horowitz, A16Z, if you will, PE company, Jeff Wong, a former global CIO for EY, and I got to have breakfast with Jeff. I guess it was lunch. Sorry. And we chatted a little bit before the event. Casey Johnson, who's the executive director now at the AI Not-for-Profit Foundation, and Rob Owen, who's the CIO at Saks. And, in this particular group, they were really talking about, how to manage these enterprise accounting environments. And in this particular case, they were talking about dealing with agents and how to get some scale that way and why you wanted to build. So, do you have any particular key points that you observed, Brian, in that section?
I would just generally, say that I think you really need to watch the AI native accounting foundation that Casey Johnson's running. I think they're taking a very leading space in this, and it's a very exciting organization because when you look at the impact of AI and you look at that data problem that we just talked about in the previous discussion, one of the things that I think is so interesting here is that I'm not sure that we're not going to have another level of revolution in the accounting space to move to these AI first accounting platforms. I don't know that you can bolt on enough AI to make the legacy products continue. Again, we'll find out whether or not we can or not, obviously, but I thought it was very interesting. It was interesting to hear David and Rob and Jeff all talk about their experiences at Eisner Amper and Saks and EY in here, because I think, we have to remember here that the sales of most of the big four firms is almost more than the revenues of every accounting firm from 5 to 100 combined. And so their dev budgets are also a lot in here. So they're keeping up with the financial services industry and a lot of other places because they're having to audit them. They're having to work with the financial services industry, which is really kind of leading this. And so it was very interesting panel to kind of hear what their take is, simply because, they really said that we're all tinkering with it, but the data problem is still the data problem. And we're having a hard time turning it into things until we can but we're working really hard on the data problem. And I think we're going to get it fixed. That was my take on it.
And your point on Casey is actually good. I have been a guest on the AI Native podcast. Obviously, I recorded that when I was in your office, as it turns out. And, maybe a bit of a point of disclosure, they are going to provide scholarships to accounting students from the AI Native Foundation. And they're going to do as much as they can to promote AI initiatives across the accounting profession. So, the launch of that occurs at Scaling New Heights. And, that's kind of a big deal. So in any case, but back to Black Oar then, the next session up was the AI native firm where they were unifying tax advisory and assurance. And, here you had Blake Oliver as the host of the accounting podcast moderating this, but you had Becky Munson, who we've talked to in the past, who is a CPA practice leader at Eisner Amper. Ryan Hittner, who's the AI audit partner at Deloitte. Jim Burke, who's a managing director over at Witham, was on this panel, along with Sean McLean, the chief digital officer of Elevate CPA, and our long-term friend and cohort, Jeannie Whitehouse, who's president of ITA, but, has come up as a CPA through what used to be the Navision company, accounting software, and many other things. So, again, we've got a long relationship with Jeannie. But here, this idea of advisory work, and, Jeannie has probably led the profession on advisory services with her specialty in the wine industry in particular. But the discussion here was, if we have a less mundane work, the compliance work done for us automatically, can we use our talent to turn it over to advisory? And, in this particular case, the suggestion was to pivot relatively quickly, and that many organizations have too many high-level, C-level people, and that the AI is crossing all functions, and that it's probably wise to have managers and below help rebuild processes. And I've been talking about how AI is helping rebuild processes. And if you haven't listened to our podcast on Tax GPT and their agents that, are helping with processes, Cash at least basically said, look, I'm not sure you even need processes anymore because the agents might do that for you. And I'm still mentally processing on that one. But, bottom line here is advisory services surfacing. And you've heard us talk about advisory services in prior accounting technology lab. There's a lot of fake advisory out there. I want you to do real advisory. And, these people, as they were talking about it, I think have a pretty good handle on the advisory deliverable. I believe advisory can be delivered by all size firms if they are client first and proactive instead of consultative and reactive.
Yeah, and I think that's a big culture change. I often talk about the traditional role of the accountant as being the equivalent of the person that's sitting in the limo going to prom facing backwards, and so they can't see what's coming ahead of them always because they are facing backwards. They're looking at the stuff that has already happened, and I think it means that we're going to have to broaden our horizons to include things like CRM data and data on the sales funnel, industry data, and we're going to have to take on things where there isn't a right answer and there's just probabilities, and we have to adjust to those probabilities. I think the thing that's hard for the cultures inside accounting firms is that in tax and audit, you always have to be right. Okay. And advisory is really much more, in my mind, like baseball, where, Ted Williams, when he bat 400, so he had winners 2 out of 5 times, just the other 60% of the time he was out. That was a win. So I think, again, it requires people to become more comfortable with managing risk and not eliminating it. So we're going to have to, again, get a little bit better at gambling if we're going to really step up and be the advisors that people need us to be.
It's interesting you bring up the baseball analogy. Of course, I know you're a big baseball fan, but I used baseball earlier this week and I said, when it comes to calling shots, I'm not as good at it as I used to be because the things are changing so quickly, but I'm only batting about 400 nowadays, which in baseball is a pretty good number, obviously. But I used to believe I was batting closer to 800 on making the right shot calls. And I think I was pretty close to that number, by the way. But I did have the privilege also of speaking with John Thompson, who I think is one of the best advisory thinkers in the world out of the UK, 2 days before recording this, podcast. And, he has several different analogies, like you're talking about what advisory really is. And, so much of the time people are doing consulting or they're doing cash financial analysis. They're not really doing advisory. And, so it's kind of a big deal to get advisory right. But that gets us then to the closing session of the day. Alan Colton did a bit of a presentation, which was quite well done on private equity. Of course, he's been in the thick of that. He's the CEO of Colton Group, but it also, brought around Brian Colton, who's the chief development officer there now, as well as Steve Ronan, who is the CSO of Citron Cooperman, and Joseph Daimano, who's the CEO at Saks. And they want to just talk about the private equity merger acquisition and firm ownership pieces. So PE is in so many conversations today. And Alan was trying to lay out the economics behind it and why it was good and why you should do that and so forth. And there was also conversation about why staying independent was good, which I thought was healthy. But in the big picture, Brian, I know you were kind of absorbing that as well. So any other observations from the PE section?
I thought it was interesting. The different architectures and the different kinds of transformations that Alan talked about, including the mothership, the roll up, wealth management, ownership transition, mega mergers, carve out, public company ownership, and non-PE ownership. And then he actually had logos in his presentation of some of those mergers that met the classification of that archetype. It was also interesting to me where he talked about the largest private equity roll-ups that were out there, including Ascend, which he said had revenues in 25 of 591 million, and the Crete Professionals Alliance that ended up with 428 million. Platform Accounting Group at 216 million, Soren, that used to be Harris, at 192 million, Richie May at 175 million, and then a host of others. I found it very interesting to actually go through and see that list, because the effect of PE is very real in this. And in some cases, when PE is coming in, they are sending more things offshore. In other cases, they're simply automating processes and coming up with standardized processes and sharing staff. It was interesting to hear those observations in his presentation. It was also interesting to hear his take on how the traditional partner compensation model changes when you move to this PE-backed partner compensation model. And it was interesting to hear with with some of the guests that he ended up bringing in there. It was interesting to also hear how they were seeing this, and how people were having things like, they had a piece of equity, but as soon as they left, that piece of equity was gone. And so it was a very interesting presentation that he did, and kind of a nice peek inside a notoriously private and secretive industry of private equity.
So thank you for all of those things, Brian, because there's so much going on that, it's just hard to believe when you get the chance to listen to so many experts. And of course, the day was wrapped up by Kelly and Teddy. They had a nice reception and dinner afterwards. But the key for all of you, and the reason we wanted to recount this, it was a first-rate event with really high-quality presenters and thinkers present. A lot of very high profile, high power managing partners in the room. The discussions I had were really rewarding, and I hope that most of the attendees were rewarded. I think they were, as it turns out. So
Yeah, I mean, I think it was probably the best event that I've been to probably in 10 or 15 years, from the perspective of everybody was there. I mean, you had most of the senior editorial staff at Accounting Today. You had CPA practice advisor folks. You had the earmark people. You had all kinds of folks in the room, and it seemed like it was kind of like the accounting and tax equivalent of the Met Gala, where everybody that's anybody is there.
Yeah, you're right. If that's exactly what I was going to say. If you were somebody, you were there. And if you weren't able to attend, I'm sorry. It was absolutely worth the time. And a lot of people had trouble getting there. Flights and so forth were delayed for many of the attendees. So there were a lot of what I'd call travel horror stories. But Brian and I, unfortunately, got a little bit used to that. Well, that said, friends, we will be talking to you in other events about new products that are hitting the market, and key events where we think we can share something we've learned with you. And we want you with us in every accounting technology lab every week. If you've got something you want to hear about, please email us, and if we have the ability to cover it, Brian and I will do our best. Until then, when you listen in again, thanks for being here today.
Good day.